Morning, everybody. 8:20 a.m. April 2nd. Markets are gapping down after Trump's speech promised more strikes. Markets don't like that. Crude's over $110 a barrel. Not looking good for markets. All right, I don't. From what I saw, I didn't see any peace talks. It was just basically we're going to take care of business. So markets are reacting currently. So that's what's going on. Now today is the last trading day of the week. Tomorrow's Good Friday. This weekend Easter. So shortened week. Now next week will be interesting. Maybe we'll get diminished volume. My daughter's on spring break this week. I know some people are on spring break next week. So maybe volume dries up a little, but I don't know. When you have a VIX elevated like this, with thin volume, could still get some decent moves. So probably in a VIX of like a 15 or below, you're probably going to get not much movement. So that's what's going on this morning. This market never basically sleeps. It's always something going on. Always something going on. Okay? Now, let's get into it. Welcome to my channel. My name is Steven Gonzalez. I use market profile and bond profile to find structure in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. Once the market opens, I use my market internals, little ICT, smart money concept, and my own basically style, and some anchor view ops, and my weekly expected move indicator that you can get for free on my Discord. All right. Now every morning I do this. All right. Please join me, subscribe, set that alert, give you the market story, the economic calendar, the market news, leaders and laggards, technical analysis, and I give you the long and short trade scenarios in the NASDAQ and the ES futures later on in the stream. Okay, now if you want more in-depth coverage, you are going to join my Discord. That's Confluence Trading. Go to my YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Okay, now we're going to get right into the futures watch list here. Now, our VIX is up 12.75%. We're at a 27.67 VIX. Crude just was over 110. It just slipped under it. Okay. And the market's catching a little bit of a bid right now. We'll see. Okay. 10-year yield up 0.74. That keeps creeping up. That usually follows crude. So the dollar is up 0.49. Probably why metals are down. 30-year bonds are being sold. Okay, yields are up. Dow is down 1.37%. ES down 1.5%. Nasdaq's down almost 2%. Russell down over 2%. Bitcoin down over 3%. Gold down over 3.37%. Ethereum down over 5.333%. And silver down 6.67%. Okay. Moving on to the Max 7s. Nothing is positive here. Okay, we will go down with the let's go with over 2.5% here. Google down 2.69, Tesla down 2.70, Nvidia down 2.71, Meta's down 2.80, Broadcom down almost 3%, AMD down almost 3%, Coinbase down 3.84, the Bitcoin proxy. Top sectors. And I say top sectors, it's the top holdings and sectors list. Okay. Obviously, Chevron and Exxon leading the pack, up 2.62 and 2.33. Okay. Now we'll go to the 2%ers on this list. That is your GE Vernova. Everybody knows that's my little baby. Okay. And the Caterpillar down 2.44. Palantir down 2.66. And the NEM Mining down 4.21. Okay. Sectors. No surprise here. Energy is up 2.48%. And then this is all you need to know, really. Discretionary financials down 1.33, discretionary down 1.65. Technology, our largest market cap weighted sector, is down 2.41. Semis is your laggard, down 3.38%. Risk off market. Risk off market. Okay. Moving on to the economic calendar. We don't really have tons of stuff going on. Initial jobless claims. Okay. Um, they haven't really moved markets in a long time. Now we have Fed Logan speaking at 11 a.m. Remember, today is the last trading day, and tomorrow's non-farm payrolls and unemployment, and the market's not even open. So that's interesting. Okay. So let's go to the one star. Maybe there's something else here that I'm not seeing. 30-year mortgage rate. No, nothing really. Now, financial juice here. Let's see if they got anything else. No, not really. We all know what Trump said on that speech. The market's just not liking it. That's basically the news. Okay. Let's see if there's any roundup for stocks here. They haven't really done that in a little bit just because oil's basically been dominating. Yeah. Okay. So Trump schedules today. Let's see. Okay. President receives his intelligence briefing at 11 a.m. President signs executive orders at 2 p.m. Okay. They'll probably talk at one point. All right. Let's go to news. Hopes dim for swift end to Iran war after Trump's speech. Oil price surge. Hopes for a swift end to the Middle East war faded as U.S. President Donald Trump vowed more aggressive strikes on Iran, sending oil prices back well over $100 a barrel. Yeah, we went up to 110. We're back over 110 again. Okay. Trump administration readies new tariffs on select drug makers. Hedge funds face worst monthly drawdown in over 40 years. Let's see here. Crisis contractor for OpenAI, Anthropic, eyes a move to combat extremism. People who show violent extremism tendencies on ChatGPT will be directed to human and chatbot-based de-radicalization. Support through new tool and development in New Zealand. All right. Futures tracking Wall Street's main exits fell in the last session of a holiday, truncated week after President Trump signaled more aggressive attacks on Iran, dampening expectation for a swift end to the Middle East conflict. Oil prices climbed, but we know that. So on the data front, investors wait a weekly reading of jobless claims ahead of Friday non-farm payrolls report. Remarks from Dallas Fed President Lori Logan are also due later in the day. Focus will also be on developments around Elon Musk's SpaceX, which confidentially filed for a U.S. initial public offering on Wednesday and is expected to target a $1.75 trillion valuation. Let's see. All right, that's about it there. All right, that's about it there. We're gonna get right into internals. Okay, I don't need to go over breadth today because we went up in the market yesterday, but we're down now, so it's not gonna make sense to go over them as much. Okay, so let's move on to our internals. Now, yesterday was real horrible price action in the beginning of the day. This was just horrendous, right? And in the morning, there was just nothing going on. And then it just melted kind of up. And then it took that back, pushed up here, right? I was able to get a short right here. I was waiting for this push. It actually went up into the most traded price of the month, got rejected into a fair value gap, and I tried one shot out of short. I kind of jumped it. See this equal high right there? I wanted that to get swept. And right here, I think I entered early. I entered here on the little break of here, and it wasn't enough. You really had to wait. So I got in again. And in futures, futures closes at like, for what I have, 415. So there was one big push in futures. I should have trailed my stop, but I wound up getting a decent trade. So positive on the day, a little green day. I had an alert set there. I had an alert set actually when the market actually bottomed here. Could have got that trade, but that's okay. All right, but internally, Just a mixed bag. Technology was up, financials was down, consumer discretionary was only a little strong, communications was slightly weak. Just not a great day. Okay, it was sitting. It was not a great day to trade unless you were like standing by to try to short that. Okay, all right. Let's get into daily charts. So dailies. So we had another day, follow through day. We didn't hit any moving averages or anything, but I said this would be a tough area to do business here because daily supply in the middle of this congestion, and that's what happened. Okay, that's exactly what happened. Now, where are we now? 645.42. 645. That means we're down $10. We're all the way down to here. So we're back inside the middle of, what is that? Wednesday. Sorry, Tuesday. We're in the middle of Tuesday's session right now. Let's look at futures. So here we go. We're right here. Okay. So we didn't hit major moving averages again, but this, remember, we got a pump. We got a pump the other day off of the Iran leadership saying they're willing to possibly make a deal. That is almost all gone. We'll look at the hourly chart in a second. It's pretty much almost all gone. That sugar rush is gone, and that's been the trend. Okay. Qs. So the Qs had a follow through day as well. Okay. Now, down, let us see here. We're at 573. We are right here. So a little above Tuesday's upper third portion of Tuesday. Okay. Now, let's look at futures. You can see we're underneath that session low yesterday, getting a little bit of bump here. Okay. Being honest, right now, I don't see how I wouldn't want to be short today. I'm not saying there's not going to be a long play, but I don't see how I would be short. I mean, would be want to just go, ooh, I'm loving a long, unless there's a setup, right? Because you could take a setup in a couple minutes or something. So, but yeah. Let's look at the breath real quick. So the breath, let's do it. All right, so let's see here where the breath went yesterday. 26% of stocks over their 50-day moving average. Okay, still kind of weak breath. Okay, so we're looking at that. All right, so let's move on to some hourlies. Oop, didn't want to do that. All right, hourlies. Okay, go to some hourlies. Okay. Let me get my marker out. So, what we have going on here, I talk about this every day. Okay. So, notice from this candle, this was the sugar rush from, oh, Iran said they might want to make a deal. Market ripped up, right? And then you got some follow through, right? And then this was yesterday. Then Trump speech happened. Boom. Left that consolidation. And guess what the market did? Cleaned up that poor structure. Then it went down and cleaned up more poor structure. Only has a little left. You can see the bullish fair value gap right there. That would end. That would be the end of the poor structure. So remember, markets are efficient. So you're getting support in a bullish for FEG for right now is bullish. Okay, but like crude over $110 a barrel, going towards 111 right now. Like I said, so what did we leave in our tracks here? Okay, you left a bearish FEG with that drop, right? That is poor structure. However, in this scenario, right, you're going to look for a couple things. Now, I'm going to add right here, there is, let's go to a 2 hour. Let me just see if there's a 2 hour here I can put there. Not sure if it's going to be, yep, okay. So, what I'm going to put here is another supply zone that just formed right here. Okay. Right there, 2 hour supply. Okay, drop it back down to an hourly now. Okay, we're back to an hourly. So you can see this is how the markets work. So right off the bat, what I'm gonna say right here, let's say around the 65.40 area, any kind of push up into this area, I'm probably gonna look for a short. Okay, I'm not just gonna do it automatically. And then there's an equal high here. So even if we swept that, came back in here, fell, I would definitely target the end of this bullish fair value gap. Okay, that's probably the most, makes the most sense. Okay, now if the market was to go super high up into this bearish fair value gap, the start of this poor structure, I would also look to a failure to fill the gap. Okay, so that's what I'm looking at in DES. You can see in the last 4 hours, you're getting a little bump here. That's the 4 hour candle. The daily candle, very bearish, right? And we're in a bullish fair value gap. So, like I said, and we did an anchor VWAPs right there. So what that's telling me, for the anchored VWAP people out there, is it's flattened out, right? So what does that mean? For this week, buyers and sellers are equal. That is the average weighted price for this week. Guess what, folks? That means that buyers and sellers are basically equal right now where price is. Because look how far you jumped over that with that news earlier, and you came right back to it. Now, let's go to the NASDAQ. It's not going to be much different. Okay. NASDAQ's very efficient as well. Okay. We're going to put that supply zone too. Let's add that. So let's get that supply zone. That's a 2 hour right there. Put it on your chart. That should slow down the market if it comes to it. If it comes to it. I don't know if it will come to it. Okay. There actually is a 1 hour here too. Is that in the ES like that? You know what, folks? I'm going to have to double it up. I don't remember if I saw that in the ES. There's a 1 hour and a 2 hour there. You know what that's telling me? There might be a 4. Let's just go up let's see. Let's start with a 4 hour. Okay. Is there a 4 hour? Not yet. Let's go to a 3 hour. Just want to make sure you get the best. All right, let's see here. I could essentially put a 3 hour there. I'm going to keep it the way I doubled it up like that. I like it like that right now. Okay. That's what I'm looking at. Okay, so NASDAQ, we're in a bullish fair value gap as well. Notice we're not as deep in the NASDAQ's bullish fair value gap. So in this imbalance, right, when you get support in it, it's bullish initially, right? Because you just should clean this out. Okay. Now we have a unfilled gap from yesterday up top, right here. The 239, we're back over that. That's the composite high volume node from the past. Okay. And you know you're going to have problems in this area, supply zones. We're going to have issues to go up. And how do you know? This is probabilities. When you go into this supply, that the market should not rip through it. It just shouldn't do it, right? If it does, whoa. Now with crude, like I said, over $111 a barrel right now. That is, like I said, I'm got to lean short today. Okay, so you got an equal high as well here, 23884s. That I'm going to very much look at that level today. That is pretty much almost 4 hours worth of candles have resistance there. And then you have the 239s above it. Okay, so right off the bat, like I said, I'm going to be buying short today. And that's pretty much it. Right? So both markets. So you have, hey, Iran says they're going to make a deal. Whoop. There's the sugar rush. And then the market liked it, liked it, liked it until Trump talked and whoop, opposite sugar rush. Emotion. You know that's an emotional candle to the downside. Hence, leaving behind a fair value gap, right? Which is like an imbalance. And then, whoop, took back. See how the market worked? Look at that. Let's go back to here. Look at that. Perfectly took back that sugar right there. Now there's still some sugar left in the tank, right? Then you pulled back, right? Consolidate it, push down again. Okay, so the job of this market right now would be to kill the rest of the sugar rush. Okay, that would be down to about 23560. That would take care of the poor structure. That's what I would be looking for today to do. Now, the markets, we all know, they don't just move like you want them to, right? Like, hence, right now, there's buying coming in, right? I would not be wanting to get long at all. So, any kind of pushing into this area, and maybe you have to do this before you go, oh, we're coming back, and then, oh, that's what I would expect today. Maybe even go down to the 235s, the most traded price of the week. Okay. All right. I think that's the 1 hours. We're done there. We're done there. Really liking today's structure. I'm really liking it a lot. A lot, a lot. Okay. I think it's pretty easy to see what to do. I like it when the markets give you that structure to look at and go, oh, that's pretty much, I know what I'm going to do already. Okay. Now let's get into that market profile, volume profile. Get a look at how I prefer to look at the markets this way, because it just shows me the beautiful market profile, volume profile. Beautiful. All right. So we are gapping down, folks. So let's mention that. All right, let's talk about that. Big gaps like this notoriously are very hard to trade. Very hard. Okay? Markets have to digest them. They're just not easy. Okay? Not easy. Now, the one thing also, very important here. All right, we're going to get into scenarios here. Oop. Oh, what did I just do? That sucks. I did not want to do that. Oh. Give me one sec, folks. I just messed something up on my graphics here. Oh, it's not what I wanted to do. No, no, no. Give me 1 sec, folks. Ugh, that's annoying. All right, I'm gonna have to improvise here and handle this later. Oh, actually, I got it. Great. All right, let's do ES long and short trade scenarios here. Okay, so let's map out some levels here. Okay, so let's break out the session. There's the price action from the overnights. There's yesterday's range right here. So if I wanted to, I could break that out as well to show you guys that's the range from yesterday. They're just 30-minute bars. Okay. So first thing we're going to do, okay, mark off gap fill. That is your 65.98s. You can see I put a box there. That's the gap. Okay. Second thing you want to do when you're in a large gap like this, mark off the 50% retracement of the overnight session. That is 65.68s. Okay. So, big gap downs, not easy to trade. Remember I said that. They're not. Okay. They're just not. So, we do have single prints right here. That's emotional buying on this sugar rush. That's also why there's a bullish FEG there. Okay. They signify an imbalance. Okay. Now you're getting support in here. That's supportive. It's bullish generally. But I am biased to the downside today. Okay. I am biased to the downside. So we're going to get right into what I'm biased of, my short scenarios. So in a big gap down, okay, I know I have poor structure here from the past that has not been cleaned all the way, and that's what I want to target. So what would I look for? I would look for a nice push up into the 65.40s area where this supply zone is. Now there's an equal high here. I want to see if that gets played with and what's going to be around the 65.50 area. If that gets hit and we sweep, close back inside this range with a lower high, I would say it would be a good idea to short it, targeting overnight lows 65.03s, then getting right all the sugar rush out at 64.90. Then you go into a demand zone. So that's probably a good target. Could you get all the way down to the 64.47s? Possibly. Okay. Now there's one other level here I want to talk about is the most traded price of the overnights, which is 65.36. Okay, so a little alternative short here would be if you can't resolve 65.36, let's say you hit 65.40s, go under it, retest 65.36 is the most traded price of the overnights. That's also a short, targeting overnight lows 65.03s, and then finishing out at the 64.90s. Like I said, there's demand here, so yes, could you take it out? Yes. Not going to be easy unless the market's just ridiculous. Okay? Now, crude right now is over $112 a barrel. That's what I'm saying. I got to lean short today. Okay? Now, one other short. That will be the last one I would try would be if you rip up, take out that equal high, go up into 50% retracement of the overnight, which is also fingerprints, which is also a bearish FEG. Okay, and the gaps in here. So any failure in here with a wick and a lower high, I am going to short. Okay, if the internals are absolutely really bullish, then maybe not. But if I would prefer this to happen very quickly, and then you short targeting the overnight lows, 6503s. All right. Hence why I'm biased short. If I'm going to do a long, which, like I said, currently I'm not a fan, but there is a scenario here. Okay. So what I would do is if I wanted to go long, I'd want the market to open, gap, and go, breaking the overnight lows into and taking out the poor structure at 64.90s, but then you're in demand. Okay. Now, if this happens quickly off the open, that's when I'm probably interested. And let's say the internals are not that weak, maybe text leading, and you get a rip up, hold, you go to that equal high, all right, and that level again, you would target 65.50s. 65.50s. Now, gravy on top, this would be miraculous, but you could really get cooking and go all the way back up to the gap fill, 65.98. Now, off of what crude's doing right now, I don't see that likely, but maybe there's some stupid sugar rush that happens that you could do that. Other than that, I don't have anything else for you longs. I'm mostly not interested in a long unless I see something, okay? Now remember, it's day trading. You can get a lift off even if I'm biased short. Moving on to the NASDAQ. The NASDAQ, okay? We are gapping down. Oh, I forgot one thing to tell you guys. I got sidetracked with my graphic. This is what the other important thing is in the ES. I just want to point this out. Okay. We're in ultimate balance. What that means is the most traded price of the month and the week are equal. Everybody's agreeing upon this price of the last month and the last week. It ranges from 66.40 to about 66.10s. What that means, okay, the farther you move away from this, the bigger the move is going to be. So ultimate balance means that big moves happen from it because that's the most agreed upon price of everybody of the last month and the week. It's a very important level, and that should be the line in the sand now for if you're bullish or bearish. Above this level, 66.40s, you got to be bullish. Below the level, you have to be bearish, meaning in the macro sense, not just a day trade. I just wanted to point that out. I forgot about that. Okay. Moving on to the NASDAQ. Okay, so let's talk about the long and short trade scenarios in the NASDAQ, the NQ futures. Remember, big gap down, sorry. And always, we're going to do the same thing. Mark off some levels. When you're gapping down, first thing you got to be aware of is the gap fill. That is your 24043 is your gap fill. Okay. Second is your 50% retracement or the midpoint, like some people call it overnight halfback, of your overnight session. That's your 23956. Okay. Now we know we have a composite high volume node of 239s. That's an important level from the past right here as well. Okay. So this is getting a momentary bounce while crude is going higher. Okay. So big gap downs, like I said, are not easy to trade. I can't stress that enough for myself. They do a lot of wonky stuff. All right, markets have to digest it. But I do believe the theme of this morning is crude's back over $112 a barrel. That is not good. Okay, crude and the markets usually are inversely correlated right now. So let's get right into scenarios here. Okay, I am biased to the bear side, bearish bias. Okay, we know we hit the week to date anchored view up here, bounced in a bullish FVG. Remember, that is poor structure from the sugar rush. This is single prints. Okay, we know support in that is bullish. However, my bias is bearish. Okay, so what I'm going to look for is we have multiple supply zones here. Multiple. Okay, so a push up anywhere in this supply zone that gets some type of resistance and a lower high is a short. You target overnight lows. Now your next target is going to be the end of the of the sugar rush structure, the poor structure, which is right at the end of that bullish FEG, which is 23559. That is your best bet because the markets work very efficient. This is demand now, and you could try to hold on to the Bronco and go to 235. Then we probably bounce a little bit. Okay? Now, if the market was to push up and slam into 239, okay, and reject lower high, that's also a short targeting overnight lows, 23666, and the poor structure, 23559, and possibly the bonus of 235. 235 is the most traded price of the week. Now, we're not in ultimate balance in the Qs, in the NASDAQ. Okay? Now, just like the ES, if this market was to momentarily, and I would prefer this to be quick, if it rips through the 239 and goes all the way back up to the 50% retracement, okay, and tries to fill this gap, and there's a bearish FEG there as well, any rejection here, okay, with this has to be quick. I don't want the market to mosey up there. Has to be quick. I preferably like it to fall below 239s, retest 239s, then you short it, targeting 235s. Okay, let's talk about the longs, which I'm not the most interested in unless there presents an opportunity here. Okay, so let's do it. What would I prefer? So what I'd prefer would be a gap and go scenario. Open market opens up, rips down through the overnight lows. I know there's demand around 23581s and the end of the poor structure. Okay, I will wait patiently. It might need to tap 235s. If it taps 235s and it rips back up, you get a higher low. Okay, to me, I would target, if I got a long here, I would target right there at the beginning of the supply zone, which is 23773. 23773. Okay? That's it. I don't really like longs in any other scenario. Okay? And that's not even a favorite, but that would be a play. And again, if this came down there, I need to see internals not weak, maybe hitting gamma level, something that's giving me an edge. Otherwise, I'm probably not going to go long. Okay? So that is my scenarios, folks, for today. I'm liking this plan today. So smash the like button if you enjoyed that analysis. That'd be much appreciated if you smash the like button. All right? Now, as always, please join me every morning. Subscribe, set that alert. Give you the market story, the market news, the economic calendar, the leaders and the laggards. And I just gave you a ton of technical analysis. Okay? Now, I just gave you also the ES and the NASDAQ long and short trade scenarios. And I think they're going to be spot on today. I'm I think that they're going to be spot on. Okay. Now, if it happens in the first 3 minutes, 2 minutes, 5 minutes, might have to happen without me. I'm not a big fan of trading that early because it's just so unpredictable. Okay. I'd like at least 10 minutes to 15 minutes to go, okay, all right, let's see what's going on here. All right. So remember, I am biased to the downside. I have a bearish bias today. Crude is staring at me at $112 a barrel right now. It's over it, actually. So that's the theme today. Okay. Now, one piece of advice, what I would say today. Okay. If two things, if the market rips up, I know from what I'm saying, I'm still going to look mostly for a short. Any kind of trouble in that supply because of the crude, because of the story, right? It hasn't finished taking care of the port structure. Okay. Even if the market opens up and drives lower a little bit, right? And I'm like, oh, all right, there it is. And then we get a rally, I'm still going to probably go, all right, I'll wait for my chance to possibly get a short. Okay? And you got to be patient because the market will give you a gift when you're patient. And when it doesn't look like it's going to come, it usually does. Okay? So just be patient. It is not easy, but how I've been trading lately is I basically go, there's my short where I want to get short with no negotiations. I put in an alert, and then I can just be free. I don't have to stare at the chart. I can talk about the markets in bullcrap with my community and see that's where I want to be short because I am not going to chase. I want the market to come to me. I want to be the casino, right? And even when I'm like, oh my God, it's almost there. And you get that FOMO, you're like, oh my God, if this doesn't go to my level and it falls. Nope. Even when I say to myself sometimes, and I say, even happened to me yesterday, I was like, oh, it just nipped that equal high. Maybe that's it. I got in, I got stopped, but then I still had confidence to get in. But I could have just waited for what I waited for, and then I would have had a nice, profitable day yesterday. So it usually makes you think, oh, it's not going to go there. And then it does. And then, oh, I got what I wanted. And then you got to know how to fire. Okay? I'm leaving you with that. So, now, if you want to get more in-depth coverage for today, you're going to join my Discord, Confluence Trading. Go to my YouTube homepage, click on the link and sign up. What are you waiting for? Let me be your indicator. Now, I've been smashing the hell out of these scenarios. Okay? And sometimes they happen without a setup. It don't matter. It's just my report card for myself. Okay? It's my report card for myself. Okay? So last week, 13 out of 14 scenarios hit. Okay? All these targets, a plus 11.75 R. And that's a combination of all my accounts. Okay? Yesterday, boom. That long scenario was there. Okay? So this is all time stamped for myself and for anybody who wants to go. Does this guy know what he's talking about? I do. I do. Okay? But at the end of the day, it comes down to execution, right? To actually say, I'm right and I made money. Now, yesterday I did make money, but it wasn't a huge day, right? So, everybody, have a great day. Now, if I don't see you in my Discord, which I hope I do, I will actually, I will see you Monday morning because tomorrow the market is closed. Okay, now everybody, hope everybody has a happy Easter, good Friday. All right, take it easy. Remember, no trade to trade. Hope everybody has a green day. Take it easy.